Perfect. I think it's good time. Thank you all. My name is Eduardo Totolo. I'm the Vice President of Research and Programs at the Center for Financial Inclusion. We're a think tank. We're housed in Washington, D.C. Will be the moderator today for this panel, which will be on AI and financial inclusion, looking at practical applications for today and tomorrow. I have a great panel here. You see some of them in person and some of them online. I'll introduce them in a second, but I just wanted to get a bit of context for this discussion. We know that AI has been in our in our sector for a number of years now. It's not a new theme. We've been talking about machine learning and their application in credit scoring for several years. We've been talking about natural language processing and how, for example, social media data could be used for supervisory technologies, SupTech, RegTech, and a variety of different applications. So it has been there for a while, but I think, honestly, things have changed in the last year, right? Like since ChatGPT, since generative AI, now we kind of see that really much closer to our own realities. I don't know how many of you are thinking, is our job on the line now with ChatGPT? Like we see that as something that is concretely more deeply linked to our work and to what we do. Now, when it comes to AI and financial inclusion, I think it's not as clear. Like it's still quite difficult to tell whether there's something substantial, something that really can have some impact, and whether something is a hype that is just going to fade away. I think we still have to develop a narrative about what that link is. And in addition to that, I think we are also not just thinking about the opportunities, but a lot of the work that has come up in the last year or two is about the potential risks. And like the language around responsible AI has entered our vocabulary quite a lot. And there are open questions about whether, well, what is responsible AI exactly? Can we really de-bias algorithms? For sure, what we know is that a decade ago, let's say, biased loan officer could make maybe a few biased decisions per day. Right now, algorithm can make thousands, hundreds of thousands, who knows, biased decisions. So the scale is very different. It's an interesting nugget, piece of information I learned today that, Compass is this, document from e-MFP, and they track what are the key areas of interest in financial inclusion, where we'll be working on. And they have a list of 20 different themes. And one of them was AI. And I don't know if you've seen like where it ranked out of 20, it was last. It was the very last one. And to me, it's quite a paradox, because on the one hand, I'm thinking, will I be replaced by AI? So I see that as a tangible problem, but on the other hand, we still kind of struggling to see really what the applications are. So we have an ambitious goal for this panel, like where are we at today? The panel today is titled Practical Applications for Today and for Tomorrow. So we're thinking about what's going on right now, what are the emerging use cases, and we'll see a mix. We'll see a mix of some that we consider more back-end applications. So applications, for example, such as the one that MFR, OpenAI have been working on streamlining reporting requirements. We have some front-end applications, and we'll have Sajida is online, who'll talk about some of the kind of chatbots applications that they've been developing to contact customers. We look then at kind of a middleware layer, those like banking software applications that that are in use and that to some extent successful or not successful. And then we look at the whole area of responsible AI. What are the key risks we should be concerned about? So we have quite an agenda. We have great speakers. I want to just start introducing them, and then it will be a mix of some presentations about these innovative tools, and then we'll also have some discussion about some of the emerging themes. Let me start with, right next to me, Dave Smith is the Director of Impact at Equitable. We'll be presented together with Lucia Spaggiari from MFR, Director of Innovation. We have online, and I'm trusting that they're connected and audible, we have Salam Faisal, Director of Investments at Sajida Foundation in Bangladesh, and Sander van der Heyden, is that right? Yeah, CEO and founder of Musoni System. Finally, we have Jonathan Fu, a postdoc researcher at the University of Zurich, who's joining us online. We have quite a busy agenda. Oh, I can see Faisal there. Great, and I hope Jonathan is there too. So we'd like to start with a round of, like a showcase of some applications that are emerging. I think most of them at pilot stage. We'll hear more. Lucia and Dave, like you have developed something I call maybe not fully correctly a back-end application, in the sense that you are trying to streamline and make more efficient reporting requirements, which I know are quite an important aspect of investments and as well as for microfinance institutions. Maybe can I pass it on to you and tell us more about what's going on? What are you working on?
Thank you very much, Eduardo. We have made a small presentation, so maybe it's good to start with that one. So welcome everybody. Thanks very much for joining this session. And today, Lucia and I will present a really practical example of AI. And the reason for that is because there's a lot of over discussion about AI, and I think that's one of the reasons why it's so low on the list. But there's also really practical applications today, and that's something we want to share with you in our presentation. My name is Dave Smit. I indeed am Director of Impact Investments at Oikocredit. A small commercial break. Oikocredit is a social impact investor established 50 years ago. We have built up a portfolio in loans, equity, and capacity building of about 1.1 billion in 33 countries. And what's more important, with 300 staff members, we reach 40 million people and 40 million people. And 87% of them are women, 60% of them live in rural areas. And we do an end client survey, and more than 80% of our end beneficiaries indicate that the positive impact is on their well-being and on their resilience as a consequence of our intervention. And I'm really proud of that, so I thought it was good to mention that. But let's go to the topic of today. Can you go to the first slide? Yeah, so together with Atlas, we build a partnership. And the reason for that is because we see really a way to streamline reporting requirements. And that's really about the financial service providers that we have in portfolio. They currently need to provide us with a lot of information, and it takes them a lot of their time. So we thought, let's find a solution to streamline that and to improve the data quality, and also to advance towards more benchmarking. So together with Atlas, we built a platform, but I think it's already on the next slide, Eduardo. Yeah, then I missed one slide, let me go back, sorry. Yes, so we decided to build a deeper partnership, and the reason for that is really both on financial and ESG data. We ask for a lot of reporting, and that's not just Oikocredit, but all our partners. We need to report to Oikocredit, to Incofin, to BEO, to all those partners. So they often need to report in different formats to many partners. So how can we help them with that? Well, we looked for a partnership with Atlas, who's actually really good in offering data on both ESG and financial data. And they can help us to report more efficient, to help in setting industry standards, and also to make better informed decisions. But Lucia will tell you more about this later. And we said it's very important to go beyond this subscription of Atlas. We said we really want to pioneer and integrate what the data which is currently in Atlas into our CRM. And not just that, we also want our partners, the financial service providers, to have them more efficiently report to us. So is there not a way to upload unstructured data in any format? That could be Word, could be PDF, could be Excel. Could we not find a way to do that process that more efficiently with maybe a self-trained model, a model that improves over time and learns like a machine, and that's machine learning, and that's the AI component in it. So let's go to the next slide. So maybe today it's good to illustrate where we are today. And today we only are on the right hand, on the left hand of the screen only. So currently, most of our partners manually enter the reporting data in our CRM portal via client portal. And that's really prone to manual mistakes, and also is not very efficient. It takes a lot of their time because they need to do this for Oikocredit, but also for all the partners. So we said, let's help them with it. And I think that's one of the key elements to artificial intelligence. It can be very abstract, but we said it's very important that immediately there needs to be something in it for the people who use it. And then next, so after this manual intervention into our system, maybe go to the previous slide. There are several steps. So it goes via an automated API. Obviously, that is a secure API. The information is transferred to Atlas, who reclassifies this data to standard format, then brings it down to our reporting format, and we can then do benchmarking and trend analysis. And that's where we are today. And I really like the picture in the middle, because it's really a combination of machine and man joining hands. And for me, that's really key in artificial intelligence and steps that we can take. Then I think we hand over to Lucia.
Thanks a lot, Dave. Thanks for coming. Welcome again. This is Lucia Spaggiari, Innovation Director at rating agency MFR. So we embarked on this very interesting project, piloting with Oikocredit, a reclassification model which uses machine learning. You can simply think about this solution as a box where financial institutions can drop their Excels, scans, PDFs, Word files in their own language, in their own shape. Each country has its own shape. And the box returns a database with unique identification codes for the indicators that we manage in the common Atlas platform, which we manage at MFR. We wanted to pilot this solution with Oikocredit. And so for this, please can we move to this slide? What we did was we first trained this box, because this box had to figure out, right, and give a probability-linked association of each indicator name to a given common code. And so how to train this box to even get started? We realized we were sitting on a large potential at Atlas, because one of the main sources of data is the publicly available financial statements that we find on supervisory authorities, central banks, even individual financial institutions' websites. And so what we used as a training database was including 3,500 individual indicators from about 1,000 financial institutions from 60 countries, 8 languages to start. And this is just the version 1. It's really just the beginning. But then we wanted to pilot with Oikocredit, and so Oikocredit decided to pick different geographies and languages. 5 partners of Oikocredit were selected, and basically we wanted to understand in this pilot, will financial institutions be on board? Does this work? And does this help? So it is just the first, and it is small, we recognize, but we were very happy to see that the 5 partners did agree to come on board, mainly because of the benefit of the reduced administrative burden in their quarterly reporting, even if the communication was very important to ensure we answered to all their questions for a successful onboarding. Second, accuracy was satisfactory. We want to improve on the accuracy. The first results were not bad, they were satisfactory, but the most important is we learned that the model can be further trained based on the first input from the individual financial statements of each financial institution, and then become even much more accurate the second time, which is what we plan. Does this help? This first pilot showed an average of 75%, more or less, coverage of the inputs that the financial institution had to enter into the CRM. This can also be improved by being more specific in the requirements of documents that the financial institutions need to upload. Small example, capital adequacy ratio was unfortunately not available from the pilot because we didn't receive files including this information, but we are sure that financial institutions do have those files. It's just a matter of learning and being more specific on the requirement. So let me pause here for now.
Okay. Thank you. So yeah, we call this a back-end application in the sense that it's not obviously dealing with consumers, it's more dealing with reporting, efficient reporting of data from microfinance institutions to the investors. So that's the space we're talking about. This is a pilot, so usually there are great learnings, great challenges, presumably, and great ambitions. I just wanted to get a sense, maybe quickly, what are the key challenges you found so far? And what is your ambition? Do you want to make this a reporting standard that is used across many different investors for many different types of institutions? Or what's the scale of your ambition?
I think you should start with the challenges.
So it was a great learning curve. We learned that you need to start somewhere, and the starting point was not bad. But most important, we learned that from the first to the second iteration, there is a lot of accuracy gains that you can achieve. And so the lesson learned on this was do much more backtesting, which is what we plan on doing before deploying in 2025. Another important lesson learned was communication with the financial institution is key in the initial onboarding, because they need to, it's change management. So even if the value proposition is very clear, because it is about reducing the time that the reporting officer spends, so they're the first ones to be on board, but still there is some change management, and communication remains very important to manage expectations. IT development should not be underestimated. So the good thing is once it is in place, so Dave alluded to this integration, this API between Salesforce and Oikocredit in both direction, between Atlas and Oikocredit system, which is Salesforce, in both directions. So that makes the data flows instant, but you need to set it up initially. And so that takes initial time. That shouldn't be underestimated in terms of timing of the project.
And I'd like to share a little bit about the dream or the vision that we have with this. First of all, I think we're all struggling to really make the impact that we realize, to make that measurable and quantifiable, and to make that really clear. And I think that's something I really would like to achieve with this, that we improve the quality of the data that we use, improve our decision making as well, because the data needs to really be reliable and of good quality. And in the end, I also think it's really great if we can develop benchmarks and develop trends. And at this moment in time, we can do that just for Oikocredit data. So slowly but gradually, we'll bring more of our partners into the system. So we agreed that every quarter we do 30 to 40 of our partners we'll bring into the system. And in the end, so by end of 2025, we probably have about 200 of our partners in the system. That's a good start. It's a good start, but it's not really where I want to go. Actually, I would like to really to other impact investors to also join, and for two reasons. One, because it direct benefits for the people who enter the data in it, so that it's not just for Oikocredit, but also for Triodos, also for Bio, also for all those other financiers who ask for the same information or similar information. And secondly, because there's really scalability in play, because we all need to report also for CSRD, also for other requirements. So it's not only about financial data, it's also about ESG data. So this could really become big and an industry standard. So we start with benchmarking for Oikocredit really internally, but we really would like to open it up and really would like encourage more participants to join, because in the end it will make all of the data more and more richer, and it could really become big.
Okay, sounds very promising. Maybe next Compass AI will be ranked higher than it has this year, after your success. That's the hope. Perfect. I wanted to switch gear a little bit now and move from this back end, so something that not involving consumers at all, to a solution that is designed for consumers. And so we have Faizan online. I can see you there. And Faizan is part of Sajida Foundation. They have developed a really interesting chatbot that essentially makes calls in local language, and Faizan is connected from Bangladesh, in not just one local language, but I think multiple local languages. that calls consumers with notifications around, for example, confirming that a transaction is not a fraud, among others. I wanted to then now give the floor to you. I hope you're still connected. I don't see you anymore, Faizan, and you can just give us a sense about where you're at and what stage of that pilot you're in. What are the results so far?
Okay, can you hear me properly?
Yeah, we can.
Yeah, I'm having some issues with my video, but I'm just going. So good afternoon, everyone. Thank you so much for having me here. I'm Faizan, and I'm here on behalf of Sajda Foundation, and I'm here to talk about a front-end deployment, which is an AI-enabled call center developed in collaboration with Hishab Technologies. So Sajda Foundation is a value-driven nonprofit organization. Our motto is health, happiness, and dignity for all. We have programs to do with financial services, healthcare, mental health, WASH, poverty elevation, social enterprises, and impact investments. Today, we will talk about more of our microfinance program, which is about 800,000 clients, and we have close to 400 branch offices across Bangladesh. So a common problem between our clients is they have limited access to smartphones, sometimes low digital literacy, and also language diversity. So traditional support channels that we have, which is primarily our field operations and traditional call centers, have limitations in terms of accessibility and also hours of operation, of course. So to address this, we've partnered with Hishab Technologies. We've developed an AI platform where clients can access their financial information through inbound and outbound calls. So I'll briefly talk about the technology. So it's a LLM-based voice agent, and the training data we essentially used were Bangla language libraries and audio clips from previous conversations between clients and call centers over about 2 years. So our target audience for the pilot was about 84,000 of our micro enterprise clients. So the capabilities of the platform is that it can converse in 14 different dialects, provide information on transactions, products, branches, staff, etc. It records conversations and queries, and also gives access to a real-time complaints management system. So our three major objectives here were to kind of expand our services for our clients in terms of 24-hour access to information, which we did not have before this. The second most important one was to phase out a manual passbook, which is seen in the picture. It's a physical document which we need to update using our field officers every time a transaction is made, which makes it very cumbersome. And the third objective is kind of integrating our complaint management process. Previously, we did not really have a structured approach to handle complaints, so it was more ad hoc through the human call center agent. So I'd like to talk about the progress of the project. So we started off with 84,000, and we successfully onboarded 64% through outbound calls, and about 7,500 of the clients initiated inbound calls over an 11-month period. So two things that were important for us, which were barriers for uptake, was that our field officers did not really appreciate that there was a secondary channel of communication between the head office and clients. And also they looked at it as kind of a big brother type monitoring tool to kind of figure out what the interactions were like between them and clients. So they didn't really push for this. So the second challenge or barrier that we faced was that disseminating information via text or word of mouth to clients about the platform wasn't really successful in uptake. So what we felt was more important was the AI agent making an outbound call and informing a client about a transaction or balance, which kind of introduced them to the service. So over the 11 months, the types of calls also changed. So initially it was more of disputes regarding transactions and balances, etc. However, now it has evolved from that to more of people inquiring about various transactional product, branch-related info, and which shows kind of evolving trust in the platform and also a source of kind of information for clients. So I've mostly talked about this table, but I'm just going to highlight something that we didn't know before. So 24% of our calls were after hours for us, which was kind of surprising. Even late at night, people were calling the call center to find out information, provide queries, etc., which was fairly surprising for us. This proves kind of a demand for a round-the-clock service, even for clients with this demographic. So 2 use cases, they're very short. So we use this in a number of ways, but what was successful is it mitigated financial misappropriation. So an outbound call, for example, called a client and informed them about one of the installments they had made. The client came back saying that, look, this information that was provided by the field officer is not correct. And the platform flagged that there was an issue with what the field officer had kind of deposited to the accountant, which was huge for us because usually these kinds of issues take about months to kind of identify, and usually identify end of a loan cycle or whether if a client really reaches out saying that there has been a discrepancy. Similarly, with data entry issues, the call center flagged a data entry issue with one of our accountants who had accidentally attributed a savings installment to a client who had a similar name to another one. So this was also resolved within 7 days, which was very exciting for us. So let's look at the objectives. So the first objective for us was kind of ensuring access to transactional information, which was moderately successful. The second was kind of, I'm just going to be a little more pessimistic now. Even though we kind of had a lot of these objectives and we kind of had some successes, but overall we didn't really make a business case for most of the deployments. So we did ensure access to transactional information, but did it influence, let's say, portfolio health or payback culture or customer loyalty? In this 12-month period, we did not see an effect on it. So the second, which was kind of the most important one for us, is kind of eliminating the passbook altogether, which was unsuccessful due to the uptake that we had. So we went to our regulator and they didn't find the use case to be interesting enough for them to kind of discontinue the passbook, which is a regulatory requirement. However, we noticed a change in behavior of our field officers and about financial misappropriation because there was a secondary channel for people to verify information. As for the complaint management, it did integrate most of our stakeholders and effectively distributed the complaints to different relevant departments. However, from a cost perspective, as you can see here, we couldn't really make a business case for it. And primarily, we looked at this as a kind of cost-saving measure, which is centered around disputes, complaint management, and etc. However, to get really the benefit of something like this, we should include like a sales focus to this program. In terms of savings, they were limited as well because the capex over a 12-month period was almost double compared to a human-centric call agent. And in terms of the total monthly costs, they were actually more than double for 100,000 calls a month. So I kind of want to end on a more positive note because I do want to be invited back here again. So a hybrid approach was probably something that we should have focused on. We ideally should have had AI do routine time-sensitive things such as payment reminders, policy updates, or even providing clients in time-centric information such as weather reports or a disease outbreak for livestock clients, which the AI platform could do effectively as it would reach a large number of individuals in a short amount of time. However, to bring in a more sales-focused approach or a sales channel to this telephonic conversation, I think an experienced or trained call center agent would effectively be better at onboarding or subscribing prospective clients to products and services. So finally, what we want to kind of do now is secure external funding to implement this hybrid approach. So we would love for domain experts, funders, or partnerships for this project. And I'm sure something like this, even in a developing country like Bangladesh, is important going forward. Yeah. Thank you so much. That's me.
That was fascinating. So many insights there. And by the way, I'll ask the audience to pick the phone, and there will be a poll just coming in a second. But before we get there, I wonder if there's any kind of unexpected change in the behavior of consumers or unexpected use case that you did not foresee and that became very relevant that you have seen as part of this pilot and maybe changed your vision on where to go with this new solution.
Can you repeat that question again? You were breaking up for me a little bit.
I was wondering if you have seen in your pilot whether the chatbot itself has resulted in any unexpected behavior change in the consumers or within staff that you did not foresee in the beginning when you designed the pilot.
Right. So from a customer perspective, we actually did. We thought it would be more of a kind of an audit call where customers would provide yes or no answers. However, going for after like 6-7 months of deployments, the call times increased because people wanted to ask questions to the AI agent about different aspects that were not included in the script. So that was something that was surprising, that someone would want to interact with something like this. From a operations perspective, like I said before, it was more of kind of looked at as a audit tool and kind of a monitoring platform, which we're kind of trying to improve now, because without buying a field officers, it's kind of hard to understand proper uptake, hard to kind of influence uptake and things like that, because we are a very human-centric process. So, yeah.
Thank you. That was great. And so I wanted to get to a quick check, a quick poll with the audience. I'm not sure if you can pull the slide back.
Okay. I'm just, yeah. Just give me a sec.
Yeah? Okay, we're there. Cool. Is this working? I don't see... It is in presentation
I don't,
mode.
can't really see. Sorry, I can't really read from the board. Yeah.
Sorry. Okay, so we can ask the question,
Yeah.
and if it doesn't work, we can continue. But basically, we wanted just to get a check from the audience, and given your experiences and the sectors, the type of organizations you represent, to get a check on which areas do you see as most transformative, as having an impact on financial inclusion in the next 5 years. Now, Sam, I'm looking at you whether we should maybe continue or not.
Show maybe the options.
The option should come as... no. I don't know what to do. Didn't work. No problem. That's right. maybe before we get there, or do you want to give one last try?
It'd be nice to give one more try.
One more try? Okay, one more try. We got time.
No, we need AI to help us.
AI to help us. There you go. There you go. No problem. Maybe we can try it afterwards if this doesn't work. So I wanted to, well, the plan was to get a check from you about what you see as the most exciting, most impactful. And then, because now what we will see, and we'll discuss now with Sander, is actually quite a different perspective. So Musoni basically plays a middleware, it's banking microfinance software. So they do not deploy AI themselves, but they do see, I guess, hundreds of applications that are trying to plug into their core banking system. So they have a very, very unique view on what people are trying, what kind of pilots are being tested, what seems to be working, what kind of does not seem to be working. And I wanted to check whether the audience resonated with Sander's finding. But anyway, that didn't work, but maybe you can share your thoughts on that.
Yep, even as a tech provider, the tech doesn't always work. So yeah, Sander van der Heijden, CEO and one of the co-founders of Masoni. I have a technical background myself, so with that also potentially a bit more interested in AI than some of the other people in the audience and in the space. So yeah, at Masoni we are a core banking provider, and obviously that means that you get approached a lot by your customers and by interested parties, whether that is investors, people in the space, and say, what do you guys do with AI? And when you answer with nothing, people often get like, why not? And that doesn't mean we do nothing, but what we say as a core banking provider, we are one of the building blocks that institutions use to build out their digital roadmap. And in that building block and in the whole journey, maybe you can put on my slide. In the building block and in the whole journey, Masoni plays one of the roles. So we see ourselves as a platform, as a spider in the web, or as one of the spiders in the web. We launched in 2013. Initially, we launched an MFI in 2009 in Kenya, cashless microfinance, 100% digital back in those days. We were talking back then already about machine learning models, credit scoring. I think you start to feel a little bit old if you say, look, in 2009, I think anyone you asked in the audience on a panel like this would predict that loan officers would no longer be there. By now, because people would do it all digitally, and the human element would be completely replaced by computer-driven scoring. So yeah, that's where we started from as well. Then life got in the way. We built a business. We now have a company with teams in Kenya, Myanmar, and in the Netherlands. We built a core banking system used by 70+ institutions across 30 countries. As of today, over 2 million borrowers are active on that platform in these different countries. We have about 2,200 loan officers every day using different digital field tools that we've developed for them and with them in the field across the globe. And our experience with AI is therefore one of basically standing there as a partner of these financial institutions, getting approached by vendors, getting approached with good ideas, whether they come from within and get put out in the market, or whether they come from the market and be brought onto them. And we wanted to do a little poll to see, look, what type of AI is most popular with the audience, and see if we had experiences. I think as that technology failed us a little bit, I think the key one that we see as basically when people think of AI and microfinance, first thing you all think about is, or at least anyone in the field thinks about, is credit rating, credit scoring. To be honest, what we've seen there over the past years is that machine learning took huge steps, and the successful implementations we've seen are basically assisting the human decision making. And we've seen very successful pilots. We've seen very successful implementations, especially in Southeast Asia, in Myanmar, where customers used basically data from their own portfolio, but from, let's say, the last decade, trained a model with it, and started using that to do assisted decision making. This didn't mean that the AI took the decision. It meant that the loan officer and the credit committee got an educated score. And the key learning there, and I think that was also the learning on machine learning over the last 10 years, is that the only way loan officers trust what the box is telling them is if the box can explain how it came up with it. So what we see there is that throwing back a number, a credit score in a rating of 1 to 10 or 0 to 100 or whatever you like, is completely meaningless and basically separates the human from the machine element if you can't explain to the human why you made that decision. And That's difficult, also for an AI. And that's also where AI has really taken the next step forward from machine learning. Because with machine learning, it was a statistical model presenting you with a figure. With AI, there is more of a capability to explain how the AI got that figure. So we're seeing successful implementations there, but I have to also immediately say that I echo Faizan's comment there. In microfinance, the margins are thin, and AI is not cheap tech. It is tech that runs on expensive computers. It also is built by people that are normally not the cheapest either. And that means that if you need to do, let's say, 20,000 or 40,000 credit scores a month, that you need to be super efficient in costing that to avoid basically doubling down on your cost. So that was one of the examples I had more or less prepared based on Eduardo and you know, the list of questions and the likelihood that we saw would come out. I think generally the more popular one on AI, I think that is more ready to use and that we see in many of the MFIs is replacing a lot of the different digital channels with more text and AI chat-driven channels. I think same as the example we just seen on the front end. And what we see there is that technology is expensive. Developing a loan officer app is expensive. Developing a chatbot is expensive. Developing then a customer-facing mobile banking app. Again, next channel. Oh, we need a Facebook chatbot. Again, the next channel. We want voice. We want a call center. What we see there is that bringing that all together into an AI model that can make sense out of either voice or text and can say, look, if somebody misspells a word, it doesn't immediately act dumb and say, what did you mean? But it interprets. That's where we see a lot of value. That's also where we see that more of our customers are engaging, but in a way where the AI acts as a co-pilot. And I think that's the key of where we see AI. That's the value we also want to attribute to AI. It's not going to replace us in the same way that machine learning has not replaced credit committees or loan officers. It is going to be a co-pilot, and institutions that bring their staff along and are able to make use of that co-pilot in an efficient way, that's where we see most of the success.
Thank you, Sander. So my understanding from what you said is basically machine learning for credit scoring is still by far the most used application. So that has been around for some years. I'm just wondering, from your perspective, you see trends, you see maybe newer applications. Is there anyone in particular that is newer that you think has a particularly strong potential to impact financial inclusion?
I think that's easy and difficult. I think what you see as strong is obviously digital lending. And I think the issue I personally have with digital lending, but also I see with digital lending, is that it lacks the human element. You go completely digital, and that missing human element is the element that ultimately can drive financial inclusion very, very quickly, but can also very, very quickly lead to confirmation bias, excluding of groups that basically are now included in traditional microfinance. So I think it is a great tool for digitalization, for digital lenders. At the same time, it can be a threat to traditional microfinance and the groups they serve, because they might be pushed out of the market by digital lending initiatives. And I think for microfinance, it's therefore, once again, one of the challenges to tackle in the years to come of staying relevant in that increasingly digital ecosystem and not necessarily relevant as an institution, but relevant price-wise, because obviously the moment you scale with digital lending, you can go anywhere you like, as quickly as you like. But yeah.
Okay, no, thank you. Let's give it one more try. Audience poll, question 2, not working. Okay, so I think we're going to just move ahead. We wanted to get a sense about risks. What do you perceive as risks? We are going to have, I think, a really interesting perspective after this by Jonathan Fu. If you don't know him, he's a postdoc at the University of Zurich. Is, I think, one of the top researchers I know on the space of what are the risks of bias, what should we be concerned about. And he has done work with us at CFI that we're very proud of, also with Women's World Banking, among others. Oh, okay. We have it. We are ready. Wow, okay, great. QR code. So what area of AI do you think will have the most transformative impact? Oh, that's the first one. Okay, okay. Okay, we'll do both at once, no problem. So we have 5 options here, but I mean, listening to Faisal and you, Sander, I think we may have missed a few. So back office, so that will be a vote for you, or customer engagement will be the vote for Faisal. Credit risk modeling will align with your argument, Sanders. Fraud detection is something we've not talked about, but I think is, or other. I mean, obviously other could be many other things. Okay, let me see if we have some results, which will be the next phase which we could fail to get. I think I'm not controlling this, right? Oh, you are. Oh, back office. Interesting. So you do win a prize. No, not bad. Okay, I see some voting coming. But so, okay, back office, AI for fraud detection, customer engagement. So that's a fascinating finding. So I think...
Slightly different than what Sander indicated.
Yeah, quite different from what you said. So sorry about that. Maybe we can move to the next one so we do both at once. Yeah. Now we want to get into the risk side. There's a number of different risks that are emerging. Bias, algorithmic bias, basically in decision-making. For example, women being discriminated or disadvantaged in any ways, or minorities. Lack of transparency or explainability, something you mentioned, Sanders. Exclusion of digitally unconnected, so the digital divide. Over-reliance on AI, so almost like losing a capacity to use the human oversight. And then privacy, of course, that's another area we're all talking about. Let's look at the results, and then we get to see what Jonathan has to say about it. Okay, we see amplification of bias, over-reliance, oh wow, interesting. So potentially us losing oversight and losing capacity to really understand what's going on. I think that's actually one that I did not predict to be on top, but very interesting. Yeah, maybe in the interest of time, but thank you. And I, by the way, after this, I would like to have some questions or interventions based on your opinion. So if you have anything to say, maybe after Jonathan's intervention, it would be great to hear from the audience. Jonathan, we just met a couple of days in Zurich. We had a great discussion about like existing forms of bias. You mentioned quite a nuanced view in the sense that a lot of the research you're known for is around bias and the risk and mitigation factors. But the situation is more complex in the sense that we have also to see what's the baseline of potential bias in human decisions, right? I just wanted to get a sense from you, based on the research, based on the various engagements that you had over the last few years, what do you see as key areas of concerns? And is there something that you think we're just getting wrong at this point in time?
So good evening, everyone. And thanks, Eduardo, for the introduction and questions, and the e-MFP for inviting me to the session. Is the audio coming in clearly?
Yeah.
It is, okay. So interesting results from the poll. I mean, I think all of the risks that were presented are pretty critical ones, but today I kind of will focus on 3. And a bit interestingly, I think the one I was going to focus on had received the lowest score on the poll, which was kind of the data security and privacy element. where, on the one hand, I think that, these concerns have existed for quite a while with kind of prior hard information and data-driven approaches. But on the other hand, I think there is a heightened risk component with AI and machine learning-driven approaches, given that I think by design, they're collecting and analyzing much more extensive amounts of data than in the past, and then furthermore, much more varied and diverse types of data. So in addition to kind of the traditional structured data on clients, they're very often using quite extensive information scraped, for example, from users' mobile phones, including but not limited to web history, contact information, social media. Many of the more recent with the advent of Gen AI, I think you see also cases where it's not atypical to collect and analyze video, audio, and visuals on customers and their environments. So I think the kind of key is that this is important for allowing for innovation from the providers, but in the case of kind of any data breach or misuse, I think poses greater consequences or more serious consequences than we've observed in the past. And then furthermore, it raises general questions about whether kind of marginalized consumers are really fully aware of the extent or types of data of theirs that's being used, who has access to it, how it's shared, and what control or rights they have over it. And then I think the second area that I was going to focus on is also algorithmic bias, and then a little bit kind of the hallucination possibility. So when there's inaccuracy or unreliability in the models, where I think by now I'm sure everyone has heard of some anecdotes of deployments of AI systems appearing to lead to kind of different unfair or discriminatory decisions. But I think in the context of inclusive finance, some of the potential risks are heightened, since first, the populations that are being targeted tend to be those that are more likely to lack digital trails. So, in general, kind of by definition, they have sparser and poor quality training data. So, built-in concerns over sampling and representation bias. And then secondly, even if data on them exists, it very well may reflect kind of historical biases that may not reflect favorably in kind of decisions made by kind of the machine learning algorithms. And then finally, these are kind of populations that may be even less empowered in terms of consumer protection with respect to data rights, kind of having confidence to request explanations for kind of outcomes of decisions, or have request kind of rights to redress mechanisms if they are going to suspect any kind of unfair discrimination. And then a final risk I kind of want to actually point out, which is maybe actually a bit more on the provider side, but I do think has indirect risk implications for consumers as well, is related to kind of operational risk and third-party dependency. We've observed that kind of institutions are kind of increasingly integrating machine learning processes into kind of front, middle, and back end. We saw examples of it earlier. Now, in practice, some, of course, do build these completely in-house, but I think the reality is also that in many cases, these are kind of being drawn on either partially or almost exclusively from third-party vendors. MIT Sloan and BCG did a survey last year where I think covering a number of different industries and countries, and kind of showing that up to 80% of the companies that were using AI were relying on third-party vendors, and then almost 50% exclusively on third-party vendors. And I think this is heightened or amplified in the case of Gen AI, where there's kind of a handful of vendors that really dominate the market and are mostly based in advanced economies. So in the context of financial inclusion, I think this raises additional risks or concerns about whether there's going to be equal access or availability to these tools for companies that are based in emerging and developing economies. And then furthermore, if it exacerbates further kind of issues of responsible AI and bias in the case when there's kind of a distance between these kind of third-party vendors and the kind of FSPs that are utilizing them, and where there may be kind of a disconnect. Awesome.
Thank you, Jonathan. I'll ask the audience if they have any questions just in a second, but before, a quick follow-up for you. So that's an interesting, almost like framework of the different categories of risks that basically we're facing that are emerging. Maybe one question is, how much of a problem versus the benefits that potentially are there do you see? And then maybe if you can give us some practical examples, maybe not in all the categories, but some practical examples of how that has materialized as a risk that has affected consumers, a large number of consumers, or categories of consumers, say women, migrant populations, or other segments that are particularly at risk.
Sure. So I think for the examples of data privacy and security concerns, I think there have been some high-profile data breaches in the U.S., but one that kind of comes to mind in the context of inclusive finance is that I know that around the COVID period, there was a lot of issues with digital credit providers, digital credit apps, for example, in South Asia, India in particular, where the data was being misused. These lenders were kind of predatory and using kind of scraped information from people's mobile phones to kind of contact and basically extort the borrowers. So, I mean, this is just one anecdote, but it highlights kind of the potential serious consequences that could arise from kind of the data that's being put out there, and oftentimes not knowingly by the people that are using these services. In terms of algorithmic bias, as you kind of point out in the very beginning, it's a bit more mixed. I think it is a concern, but in practice, you do see that there's mixed evidence on whether in practice machine learning methods are necessarily leading to worse results in terms of improving kind of equitable outcomes or access relative, for example, to human-based decision-making. And, you see this in some academic evidence. I've seen it in kind of an applied sort of case study where I worked with a number of different digital lenders, some of them relying on fully machine learning approaches, some on hybrid approaches, and then some where they were still relying largely on human-based approaches. So I think these concerns are certainly important enough to warrant serious thought and attention and implementation of as many guardrails as we can reasonably implement. But on the other hand, I don't think that they alone are enough to kind of discount the practical opportunities that are also there with the use of AI.
Thank you. Quick check with the audience. I wonder if you have questions for any of the speakers or any interventions. Great. There's a microphone coming. Okay, I see a couple. Perfect.
This is a question for Lucia and Dave. When you were describing the platform, did you use any AI functions for interpreting any sort of outcomes reports from the financial institutions? I'm just going to, I've tried to use different ChatGPT platforms to say, please provide me the abstract of what this paper is about, just to speed up my own reading. And so I'm wondering, has something like that been incorporated into the platform itself? Because I know Atlas has something on outcomes, it's not trying to necessarily say this is the indicator that everybody's using, but I wonder if that's part of the AI functionality as well.
Do you get a second question? I see there's a hand raised. Maybe and then maybe we respond together. Yeah.
My question also to Lucia and Dave. Really, you mentioned that your system can reduce reporting burden, but especially the credit worthiness or credit risk analysis, really you did not mention anything. If I say in the context of Bangladesh, some upgraded members or borrower, they are using a smartphone, bank account, they have bank account and maybe also mobile money. But Sajada Foundation brother is there, so he can also understand. especially if those who are very, very poor, they are not using any smartphone, not using any mobile money, and really you cannot get any financial data. Some of the MFI, they assisted them to open a bank account. Just they are giving money to the bank account, and once it is withdrawn, no other transactions. Practically, you cannot get any financial data. So if this is the situation, how the system can work? Maybe my brother also, he said also, they have some creditworthiness or credit scoring system. If this is the situation, how it is working?
Okay.
Because country to country it is different. You have tested in India, they are more literate and everybody almost. But here they know only some digit, 1 to 10, no other letters. So if this is the situation, you can respond. Thank you.
Okay, thank you. Maybe we can start, and then also Faiza, maybe you can follow up.
Sure. Bobby, may I clarify? Your question was on outcomes indicators on change in clients' lives. So for now, the reclassification model, which is a machine learning model, is focused on the financial statements and the portfolio reports. In future, we may look at other areas as well. One point I'd like to mention is we developed the model, which in practical terms, it's a Python code which is embedded into Atlas. We also tested some large language model, and the results were not satisfactory. And so we had to develop one in-house. And the gentleman question, I believe, which is, this Atlas and Oiko Credit partnership is between the asset manager or cooperative like Oiko Credit and the financial institution. I believe your question is more for Sanders, the situation of how a financial institution can assess a potential borrower with very little data.
I think that the answer to that question we've seen in many markets is ultimately the reason of being for credit bureaus, and is where I think regulators play an important role, because ultimately the only way you find out about these things is through getting the data. I think that would also be one of my questions to Jonathan is there any studies and evidence towards how an AI-based model rates credit of people that you have no data of? Because obviously, the new bias now becomes that you need to have a digital footprint in order to be fitting somewhere in the model. And the smaller your digital footprint is, at some point, the smaller the decision vector for the model becomes. And I personally wonder what that means for, again, financial inclusion or exclusion, and whether or not there has been any studies, but I might not be the one asking questions there.
Why not? Maybe we can check, is there any other question in the audience? I see one behind you.
Yeah. So, it's quite loud. So basically my question, my question was, the way that I envisioned, the way that I envisioned AI being most useful for financial inclusion is to provide tailored advice on financial and business management to borrowers, along the course of their loan. And so I was wondering, from the perspective of the professor at the end, especially, whether you see that there might be some risks inherent in that, and whether you would think that it would make sense to use kind of like an open source AI model like ChatGPT that has a lot of information, or you think that a financial institution should have their own vendor and their own dedicated data sources.
Thank you. See, there's one additional question. We'll take that, and then we get to responses.
Hi, everyone. Thank you very much. I'm a co-founder and CEO of a new bank for newcomers and immigrants in Europe. And we are challenging, and I think everyone, the challenge is about the KYC processes, especially with the document recognition and the, for instance, the face reading tools. And we see in the first part, we have a lack of tools to read and assess the right document of all around the world. And today in Europe, we are very European-based KYC approach. And in the face recognition, we see a lot of biases of tools. To be honest, the more people have a dark skin, the less they can pass the KYC processes. And this is a very big challenge for us. We try to improve our tools, but do you see some other solutions in the market, or I don't know how we can tackle this problem?
Thank you. Tough question. Maybe, Jonathan, do you want to go first? I see there are a lot around bias, but also Faizan, I wonder if you also have some thoughts about potential innovations, especially in the KYC space. Jonathan,
do you want to go first?
Sure, I can go first. So I guess moving backwards, the question on KYC process and bias. So something that I have seen come around, and I'm not sure if it's been applied as much in terms of visual imagery, but I assume it may have, is kind of use of Gen AI to do synthetic data sets, where in some cases, I've seen some researchers and companies kind of making applications of basically creating synthetic data that could be specifically tailored towards kind of addressing some kind of imbalance in training data, and or like if you define some fairness metric or objective among kind of this menu of different common indicators that are used for kind of describing fairness, ways to kind of generate artificial data that can kind of help to improve the accuracy for previously kind of undersampled populations. So that's one thing that just kind of immediately comes to mind, but I don't know, to be honest, I haven't seen specific examples in the case of kind of visual imagery data.
Yeah, so for us, we've actually partnered with Axion to kind of develop a credit scoring model, and this kind of KYC issue was a concern, especially when we were trying to disburse new loans. But however, we kind of discussed two aspects to this. So some of these AI, like algorithmic credit scoring platforms, may not be relevant for us at the moment, because we more focus on how we can graduate our existing clients with these models to see whether AI is flagging certain client behaviors that are giving them kind of a leg up on other clients in terms of loan sizing, in terms of, let's say, savings potential, this kind of approach. So for us, because Bangladesh, we do have limited data sources, as suggested by someone from the audience. So kind of focusing on better data sets, such as clients that we've been interacting with, let's say for a 2-3 year period, is probably a better way to kind of use AI than going on things that you currently don't have, if that makes sense.
Thank you. We may have time for maybe one last or couple of questions. I see there's one here. Yeah. Oh, also behind.
Ever answered. Yeah. I don't know. Was my question ever answered?
Good point. I think your question. Not sure if. I think your question was primarily around the application in kind of customer engagement. Yeah, like.
Can I could take a stab at it if you want.
Please.
So we kind of did this because some of the queries that we're kind of dealing with now are questions on whether I can get, what insurance product should I get, or what kind of accounting tools or measures should I be using, which was very surprising for us. However, we're not very comfortable to answer these questions at the moment because the loans that we provide are to a very vulnerable group. So if they face a lot of external challenges, a lot of it's a lot more informal. So it's not very so the loans they're taking, you don't really know what percentage they're kind of using for their household expenses, what kind of amounts are going towards the business. So providing them structured advice on particularly how to run their business or how to kind of use finances may be risky in terms of reputations for us. So we've kind of focused on very easy to do things like I mentioned, insurance. So whether you take this type of insurance for your crop cycle, or whether you take this type of insurance for your livestock. So these kinds of things are more safe. So I would rather suggest, especially from a Bangladeshi context, to kind of stick to that in terms of providing advice through chatbots or AI platforms.
Thank you. Maybe that partially answered. I think maybe didn't address the bias question that you had. We made that to just pick one more. There's one question here in front, if you can pass the microphone. And then maybe I'll ask also the panel to just
yes, thank you
share
very
some
much.
thoughts about where we're going in the future.
Yes, Alejandro from Investing for Development. So from the fund side, I'm really interested to understand more about the cost side. I was actually a little bit surprised when one of the first presentation was looking at the cost perspective and CapEx and how the CapEx is amortized over time. And, the first idea, we have when we think about IT and having these processes is to actually, in the long run, have a more cost-effective. So if you can go a little bit more into the detail of why actually cost-wise doesn't seem to be a competitive business case to prove.
Perfect. I think Sander and Faizan, I think you have probably the most to say here.
Faizan,
Sander, do you want to go first?
Yeah.
Okay.
It's time.
So for us, because this is a pilot, we were kind of going on our external partner on what kind of CapEx costs they would have to kind of improve some of the functionalities of the platform. So what we realized that in terms of continuous development and also improving the training data and also procuring the training data sometimes externally would have certain costs, which would kind of not offset, let's say, a simplistic investment in an office or hardware or space for a human call center agent. So from a CapEx perspective, that's why we thought that the AI platform was much more expensive. And from an OpEx perspective, because we're also an NGO, we receive a lot of subsidized rates from network providers, etc. And also the salaries in Bangladesh for call center agents are fairly low. So we've kind of done our estimate for an additional call center resource would be about $100 per resource. So when you kind of calculate the cost per call, including all of these costs, they're substantially lower than what we've been paying our external vendor for these AI agent calls. Yeah.
Yeah, and I think from our side, we can echo a lot of it. I think the key bit here is that a lot of this tech comes from third parties, and those third parties also need to, one, make a viable business, two, invest in both the compute power. Let's be real, that's huge for AI. I think if there would be a carbon footprint on every single question you pose to ChatGPT, it might be good. Obviously, ChatGPT might not find it as good, but I think it's it's genuinely the cost of compute are astonishing in AI, and those need to be handed down, and that's where we see. You need to get it right, and you need to get it bang on, and it requires constant, continuous development. It means hiring data scientists. Those are not cheap resources compared to a classic loan officer, and I think that's where ultimately over time costs will drop. Over time, standardization will kick in, development will crystallize a little bit, and costs will ideally come down a fair bit. But yeah, let's be real, the free trials we are all using of ChatGPT, etc., they're there to train their models. They are not making them any money. Those companies are losing a lot of money. So, you know, the moment you start buying this tech, unless you do it from a loss-making company that is learning from you, then you're the product instead of that you're buying a product. I think that's the bigger reason the tech is expensive. It's new, it's in development, and that's what we all need to pay for being customers of that tech.
Thank you. I see that it's time to wrap up. I think a few thoughts here is cost is a big factor. Lots of experimentation and piloting mode, so we're still learning. We don't know yet how to distinguish what truly has potential and what kind of won't materialize in the future, but we're making progress in that direction. Bias is something that is there, but to what extent it counterbalance potential benefits for inclusion is an open question. Let's wrap it up here. Thank you very much. Maybe let's give a round of applause to the speakers. Thank you.